Welcome back, everyone. Next up, we have Houston Natural Resources Corp. It trades on the OTC Pink sheets under the symbol HNRC and is a diversified energy company with oil and gas interests as well as wastewater treatment facilities. The Halff Oil Field in Crockett County, Texas, has 83 oil wells with estimated 33 million barrels of oil and water treatment and appraised reserves of 69 million. Today, let's welcome Kristan, the chairman and CEO of Houston Natural Resources. Welcome, Frank. Glad to see you today.
Great. Good morning, Anna. Thank you for having me. I appreciate it, and we'll look forward to discussing the company this morning. And I appreciate the emerging growth companies having us and presenting here today. And so we are a global natural resources company that we're looking at focusing on building a portfolio of investments in energy companies. And so on our summary, we do own at the moment three investments in energy companies. The first one is Houston Natural Resources, Inc., that has about 2,800 acres located in Crockett County, Texas. It's oil wells, about 83 oil wells that are able to be worked over with an estimated 33 million barrels of oil and appraised reserves of 69 million. HNRI also owns H&R Oil Services Company, which is specializing in recycling and remediation of oil-produced contaminants from the drilling sites. It owns and operates a reclamation plant, which is located in South Texas. HNRI is also, through HNRAC Sponsors LLC, a sponsor of a special purpose acquisition corp called H&R Acquisition Corp that listed on the New York Stock Exchange. Symbol is HNRA, and that had 86,250,000 available for a business combination that listed in February of last year, and has made an announcement that it is going to be doing a business combination with Pogo Resources. And so that is expected to be, at the moment, they're looking for an exchange expect to be completed later this quarter. So that's the first investment that we have in the energy space. The second one is we've acquired a 9.9% interest in Cunningham Energy, which is a West Virginia-based independent oil and gas company. We do have a pending letter of intent to acquire the additional up to 90.1% interest in Cunningham Energy. It's an interesting operation in that it's got an engineering report with independent appraisal of, as of December 31st, 2022, of $352 million, assuming that a 40 well program is completed. And so the company is working with Cunningham Energy to complete that acquisition and get financing for the drilling program to be implemented. The third third investment is we've acquired a 40% interest in Rhino Energy Pty Ltd. Rhino Energy is an Australian company, but it has a focus on oil and gas developments in North America, and already has investments in North America, in Calgary and in Canada. And so those three, what we're doing at the moment is each of those operates their own management team, and so we oversee those investments, and we're looking to consolidate as part of the strategy. We would own some interests, some are non-controlling interest, but we're focused on the management teams and helping them implement their business plans. And so that's basically an outline of what we're looking to do, or what we have done to date, and the business model of what we're looking to do. the opportunity we see is in this particular industry, the large oil and gas companies, including Exxon and Royal Dutch Shell and Chevron and BP, are currently selling a combined of more than 100 billion in oil and gas assets around the world as they focus on more top performing regions. And that was from a news analyst from Rystad. And the opportunity there is as they divest of those, we see that as an opportunity to be acquiring them and building up a portfolio of those investments, both control and non-control. In each of those deals, we're looking to maintain, the management team, who's been able to identify additional acquisitions, and that's where we've been able to find those from a network of brokers, the management team, and have been able to identify potential acquisitions in the oil and gas industry and the oil and gas services industry. We've also been looking at opportunities in the oil services sector, as well as the wastewater treatment sector in the energy services space. We believe that the management that we've got in place in each of those, it provides us, a good team to be able to implement the business strategy. In the opportunity in Cunningham Energy is that they've got 30,000 net acres, and they've got at least, sponsored drilling programs on 40 wells. They are currently producing on a small number of wells at the moment. So we've seen that plus the 86 wells opportunity in Halff Oil Field for the workovers and production capabilities of those existing wells. And we're working with them to get the capital to rework those wells, as well as the drilling program required for Cunningham Energy. The other situation, Cunningham Energy is sponsoring a CE Acquisition Corp, which is a pending SPAC, Special Purpose Acquisition Corp. It's a $100 million focused on a business combination in the energy industry. We have been working on the sponsor capital for that program as well. The other opportunity we see with Rhino Energy is that they're looking at making acquisitions and further investments in North America and in Canada. And we see some operations in Canada, and we've been looking at opportunities in Canada. One of the opportunities Cunningham Energy has is on around 900,000 acres in Quebec province in Canada that it's got a workout agreement on. And so we're looking at those opportunities in Canada, both on the east and west coast of Canada. And so through Cunningham Energy, we're also looking at some other international opportunities in South America and as well. And so we're excited about that acquisition getting completed and getting the capital to further develop it and get better returns from the investment. And so that's where we see the opportunity. We believe in the big picture of the opportunity over the next few years in the energy industry. We're a bit contrarian like that. We are focused on some of the ESG applications of it, but we see an opportunity over the next few years in the energy space, and that's why we're looking to build this portfolio of energy companies. The oil fields operations on that slide, you'll see where they're located in West Virginia, and we've got the 9.9% currently the interest. It's noteworthy for several reasons. It's got diverse operating areas in the US, West Virginia, Kentucky, and Ohio. The map doesn't show the opportunities that we've got in Canada as well. They've got existing production with high growth potential. Cunningham Energy was the first to develop shallow horizontal drilling and the basin with oil focus. The verified increases of 60 to 80% over vertical shallow oil well drilling. By combining the E&P and oil field services, which is what we're looking to do in terms of making a vertically integrated oil company, it will lower the costs and increase the control over the vertically integrating process. There is 30,000 net acres in West Virginia and over another 20,000 additional acres potentially in West Virginia, Ohio, and Kentucky. They've also found proven shallow oil opportunities in the Appalachian Basin, Cow Run, Big Engine, Weir Sandstone, Berea Sand, Clinton Sandstone, and Devonian Shale, I should say. And they've found large growth potential in the Big Engine Sandstone, with potentially 75 to 100 other potential well sites on existing leases. The oil field operations in the Halff Oil Field is in Halff, and the slide shows the location in Crockett County and the Permian Basin where the Halff Oil Field is located. The Permian Basin being the most prolific oil area in the US. An existing oil field with proven reserves and 83 wells to be reworked. It has a prolific oil zone called the San Andreas Formation that has not been exploited at the present time. This producing reservoir is in the Grayburg Sand of the Permian age. The Halff Oil Field has produced about 3.9 million barrels of oil to date from that Grayburg Sand. The original oil in place in the Grayburg Sand is calculated to be 36.9 million barrels of oil. The zone has been producing oil for over 50 years, including the Halff Oil Field, and continue to be a productive area for at least another 20 years. Again, we've had independent evaluations done of the potential there, and it's at approximately $69 million based on oil at $60 a barrel conservatively. And it's been the same with our valuations have been conservatively using the current oil prices and gas prices. Then the H&R Oil Services is a wholly owned subsidiary of H&R Natural Resources, Houston Natural Resources, Inc. It collects fluids from third-party operators and disposes of the fluids in the company-owned disposal wells and their saltwater disposal units. And ultimately, they're remediating the oil field waste solids at its treatment facility in Texas. And it's designed specifically for maximum environmental protection for the oil producer and exceeds all state and federal regulatory requirements. And that would generate multiple streams of revenue for H&R Oil Services, that it gets revenue from the water treatment, in addition to revenue from when they separate the oil from the water, and they got additional sales from the oil as well. This facility will eliminate antiquated disposal methods of harmful drilling byproducts and contribute to producer profits, eliminate potential liability costs associated with environmental pollutions. And it's comparable to another. It's attributable to this endeavor is significant and offers immediate stockholders value with what we're doing. So that is an outline of some of the actual oil field operations that we have currently in place. And then The next slide, we're moving on to the management team. We believe that we've got highly qualified and experienced team of business experts, engineers, geologists, geophysicists, scientists, and accountants. Collectively, they're contributing their many decades to professional and practical experience collectively for the benefit of HNRC and its shareholders. That is my background on the slide. I'm originally from Australia, and I've been here about probably more than 35 years. My background it was based in New York for a number of years, and then in Maine, and then in Virginia. It's been the experience of building successful companies, of which we've had some in the past, and in the operations that we've done. And we look forward to implementing that business plan in the energy sector, and that business model of getting a portfolio of companies in the energy industry, as we have done in some of the other industries. Brian Cunningham is president of Cunningham Energy. His background, he's got more than 30 years of oil and gas and finance. He's currently in charge of Cunningham Energy and Mars Corp Oil and Gas, which is the company that is operating the Quebec-based Canadian operation. Viper Capital Partners helps raise capital for drilling, and Raven Ridge Energy. His history has been extensive in that industry in West Virginia, and he has created an independent oil and gas production firm, and a very good experience. The management team for Houston Natural Resources is outlined, and Donald Orr and David Elks, who are the management team running Houston Natural Resources. They've got more than 35 years in David's case, and in Donald's case, more than 40 years experience in the energy industry. The management team for Rhino Energy is Thomas Fontaine, David Whitby, and Grigor Mawini, and Michael Mason. And each of those have got more than 30 years to 35 years of experience, both domestically and internationally. And so we'll be relying on them for their extensive experience in identifying additional acquisitions, as well as building, as they have in the past, building companies from 1 million in revenue to 600 million in revenue, and looking to build a company that can go to 25,000 barrels a day is what we're looking to build through Rhino Energy. And that outlines the management part of the presentation. The last slide is showing the financials for the last 2 years as to what the assets and the investments, the investment in Worldwide Diversified Holdings, investment in Houston Natural Resources, investment, in Cunningham Energy. The investment in Rhino Energy was made in the last quarter, so that will be in the next filings for it, the investment in Rhino Energy Pty. The investment in Worldwide Diversified Holdings is being spun out as part of a dividend process as for shareholders. And then the balance of it, so we've got total liabilities, we've got stockholders' equity of approximately $91 million. So it's been shown over $1, nearly $1.50 in shareholders' equity on the from the stock price. And the 12 months for December 31st is the income that we had compared to the previous year. and we're still showing a profit before tax of EBITDA of 9.6 million. And a lot of that revenue has been coming from advisory services we've been providing to the portfolio companies on the worldwide diversified, as well as to the other portfolio companies. And so that basically is the summary of Houston Natural Resources and what we're looking to do and build here over the next few years. And so, Anna, I think that is where we are with respect to the summary of the company and its operations, and would be welcome to open up for questions.
Wonderful. Thank you, Frank. We do have some questions from our audience, and let's just address the dividend. So the company has previously announced a dividend to be paid to its shareholders. So can you give us an update on that process, and what is the record date by which you need to be a shareholder in order to receive the dividend?
As previously announced from the company, it was announced in December 5th of last year that the company would be spinning off, as I mentioned in the presentation, the assets from the worldwide diversified holdings. And that valuation was going to be approximately at the time $1.75 per share, in which case they were getting a dividend of 2 shares. For every 2 shares of Houston Natural Resources Corp that they receive, they will get 1 share of worldwide diversified holdings. And the record date was initially at December 16th, 2022. During the process of review by FINRA, we're waiting for that to be completed. We anticipate that soon, and it's taken longer than we had anticipated in being able to provide the dividend date and the payable date. Once that is cleared by FINRA, then there would be an announcement on the FINRA's daily list as to the record date and the payable date. So that would then be announced to the shareholders, and so they can then, then be public information as to when this has been completed.
And Frank, can you talk a little bit about the company assets and how do you expect this to benefit shareholders?
We have, as we've explained during the presentation, our investments in Houston Natural Resources, our investment in Cunningham Energy, and our investment in Rhino Energy. The strategy that we've used has been to get a liquidity event on those investments. That includes actually also the investment in HNRA. And so with that liquidity events, either providing dividends, additional dividends for shareholders, in addition to if there's a sale of those, whether we'd be able to provide cash dividends to shareholders. But we're looking at a business model is to make these investments and then over a strategic time frame of 3 to 5 years, look to get a liquidity event on each of them that will provide a return to shareholders.
And can you talk a little bit about your expectations for the company in 2023?
We're looking, we've executed well on the business plan in 2022, whereby we've increased revenues, we've increased our asset base, we've made announcements on a liquidity event for shareholders on the dividend, and we continue to proceed with that. In 2023, we've already made one announcement of the acquisition of Rhino. We expect to be able to do additional acquisitions this year, and also raise capital to further implement the business plan, help the companies with their drilling programs. And then we are also looking at an uplisting of the company onto NASDAQ in 2023.
Perfect. And we have a question from Dave Clemens. I know you're going to be listed on the exchange later this year, correct? But do you foresee having to do a reverse split?
No, good question, a fair question. The valuation of it will depend on where the price is at the time. The stock over the last 2 years has traded, as high as I think initially probably around $2 a share since we've done the acquisition. And so depending on where the shareholder price is at the time would depend on whether or not there would be a reverse split. And that's sometimes the requirements. I'm sorry, Anna, for interrupting. That is depending on the requirements of which exchange that we're listing onto, whether it's the OTC, the OTC, QB, NASDAQ, NASDAQ small cap. So they each have different requirements of which the share price was one of them.
And Will Curry wants you to talk about the relationship between HNRC and the SPAC, if any.
Yes, the HNRC owns HNRI, Houston Natural Resources Inc., which owns 75% of HNRAC Sponsors LLC, with 25% of that HNRC Sponsors LLC owned by Lubick Holdings Inc. And so those shares from HNRAC Sponsors LLC are subject to lockup agreement and trading restrictions. And so and then in addition to that, HNRC has made a $100,000 investment directly into HNRA as a note with warrants. So it will be receiving warrants, or already has received warrants from HNRA on that investment that was made in January of this year.
And Dave Schwartz has a question concerning the Rhino acquisition. With a 40% stake, do you have any control over operations? And what do you plan to realize on your books, if you can talk about the top and bottom line?
What excites us about the Rhino Energy acquisition is the management team who have built companies from $1 million to $600 million, and we don't. It's one of those investments that we're looking at keeping it as a minority investment. We're currently aware of what their future plans are, but they're on a confidential basis at the moment in terms of, and they will be disclosed, in the future. And so we expect that to be a very beneficial investment later this year.
And can you talk about how much oil Rhino Energy is currently producing and what type of oil and where? Ben Hiron wants to know.
It has an investment in a company. It does not have a control investment in producing oil at the moment. It has an investment in a company that is doing around, I think, about $6 million in revenue, and it's doing about 300 barrels a day currently. But the investment is that we're looking to grow that to substantially more than that. So.
Okay. And we have a question from Sharon Riley regarding your interest in acquisitions in the services industry. Does this pertain to working with other wells and programs around you? And what is the plan for scaling this?
Good question. Yeah, we've looked at services that are providing for frac services, that are providing also additional saltwater disposal units, trucking fleets that provide the services. And then, so we're part of Cunningham Energy has a division that is working on the oil services side that we look to expand in that space as well.
And Davis Johnson wants to know, when will HNRC get audited financial statements?
Good question. We've retained a major accounting firm, and in addition to a major auditing firm. And we anticipate, I think we've indicated that we're looking to get that completed in the second quarter of this year. Which will provide, and it was one of the requirements for the uplisting later this year.
And Derek Breitenbach wants to know, do you believe all information FINRA requires to approve the WDHI dividend has been provided?
As of Friday, yes. We've gone through a series of questions with them, and as of last Friday, we've provided everything that they need. So we are expecting a decision soon.
Wonderful. Well, Frank, do you have any closing remarks for our viewers?
No, I'd like to thank you, Anna, for the time, and to thank Emerging Growth the opportunity to present here. And we're just to say we believe the company's undervalued, and we're excited about its opportunities over the next 12 months.
Wonderful. Thank you so much for your time with us and your presentation. We would love for you to come back with some updates.
Great. Thank you, Anna. Take care.
Okay. Everyone stay with us. We'll be right back with our next presenter.